So when we think about baseball and we think about a pitcher and a batter, the pitcher is trying to throw to a strike zone. And that strike zone goes from the knees of the batter to his shoulders, and it stays within the walls of the plate. And a pitch can be thrown anywhere within that strike zone, anywhere within that box, and it's called a strike. Anywhere outside of the box, and it's called a ball. The pitcher and the batter both know where that strike zone is. When we think about IRMAA and the tax brackets and how it's calculated, how the income-related Medicare adjustment is calculated, it's a little bit different in that the strike zone, it can move. So Spencer, you want to talk us through how that works and what IRMAA is and how do we think about this?
Yeah, so it's one of those maddening things. I was a pitcher, and you want to know exactly where that zone is so that you can try to hit the corners and hit the different areas that you're looking for. And really, this is like a strike zone that you have no idea necessarily where it's going to land. You can only see a little bit of the trajectory of where it's going, but it's like you release the pitch, and you're not going to know what the umpire's call is until the umpire makes the call.
Yeah.
So it can be a bit maddening in this. And you'll see what we mean as we say this. So the income-related Medicare adjustment amount, it's basically the Medicare surcharge. Medicare is underfunded. And so the government put in this surcharge basically to ask higher income people to help pay for the benefits that everyone receives via Medicare. So there's a number of tiers with different thresholds of income. And if you hit a certain threshold of income, then you have a surcharge that is applied. Now, what we were joking about there in terms of baseball and the strike zone, the difficult thing is that we're looking 2 years back with respect to income. So in October, I guess it was, of 2022, we found out what the surcharges for 2023 would be, but they were based on numbers that were your 2021 tax return numbers. Mm-hmm. So you're not going to get the full picture of the strike zone, so to speak, until 10 months after the fact. So the last time that you could really do something meaningful to prepare for a potential surcharge in 2023 was December of 2021, but you didn't get the information about the exact data until October of 2022. So it just is one of those elements that the government makes it a little bit more difficult for tax planning and these kinds of things, knowing what the rules are. So Austin, can you unpack how they come up with these calculations in painting the strike zone, so to speak?
Yeah, sure. So how this is calculated is the Center for Medicare and Medicaid Services, the CMS, takes the Consumer Price Index for all urban consumers. There's a lot of different consumer price indexes, Spencer. This is different than the one that they use to adjust the Social Security cost of living adjustment. So,
because other people need a job, clearly.
Right.
We need to have lots of different indicators.
Yes,
okay.
Lots of indicators. It makes it a lot more helpful and a lot more confusing. And the way they calculate it is more confusing as well. Okay. So they don't just use the end of the third quarter and do a year over year. They take the average from September to August of the previous year. So September of, let's say, 20 year one to August of 20 year two. And that's your base. You take the average of whatever that index was over that base, and then you adjust it based on a baseline. Mm-hmm. So the baseline right now is at 2018. So every year they're going to adjust how far it grew over 2018, and that's how we get those bracket step-ups. So the 2019 was based on 2017, and it just keeps back going up and up and up. And then in 2026, we're going to adjust again. So the new baseline is going to be 2026, starting for 2028. So we're going to have to redo the calculation starting in 26 to know what that baseline was. So then we can start the adjustments for 28. Wow. So it's a complex calculation. You don't need to understand how to do it. We're going to do our best to kind of figure out where do we think it's headed. Mm-hmm. But again, we don't know what the CPI is going to do next year. We can kind of start anticipating it. Mm-hmm. But the problem is we don't know where it's going.
Right.
Because that basket of goods and services, the price fluctuates.
Yeah.
So when we think about this, we're going to take a look at the table that is for the 2023 IRMAA adjustments. Mm-hmm. So as we look at this chart, what we're seeing here is our total 2023 Medicare surcharges, Part B and Part D, based on the modified adjusted gross income. So what we talked about in the table above is the Medicare surcharges you'll incur on Part B. Part D is your prescription drug plan. So these surcharges that you see on this graph are the total annual surcharges. So as you can see in that bottom bracket, there are no surcharges. Once you make that first dollar into that first bracket, that's when you're going to get the monthly surcharge of $65.90 for that first one for Part B. For Part D, it's $12.20 per month. And that's for everybody that's taking Medicare Part B and Part D. So if we look at that first bar, then your total annual surcharge of Part B plus Part D over the entirety of the year is going to be $937.20 per person. If you jump into that second bracket, it's now $2,355.60 per person. Again, this is Part B and Part D, just the surcharges that we're looking at. So you've also got the base amount that you pay of $164.90 per month per person. So over the course of the year, those surcharges really start to add up. And that's why we want to do things to avoid them, if possible. So hopefully those visuals helped understand a little bit more about the Medicare surcharge brackets and then the taxes that, or not the taxes, but the penalties that you can incur on top of your monthly premiums. So Spencer, what do clients need to know going forward?
Well, first, as you alluded to, Austin, that extra dollar of income is really nasty, because one more dollar of income, if we knew that you were right on the cusp there and that one extra dollar would cost you potentially $900 or $1,500 or even more in overall penalties. If we have a couple that we're working with, it can be over $2,500, that one extra dollar of income. So one of the things that we have to just recognize is, because we don't actually know for certain the thresholds while we're doing tax planning in a given year, usually we will try to have a conservative estimate and be a couple $1,000s lower so that we can stay away from being right on the cusp of that, if at all possible. The second thing is that we can actually do some tax planning around this for many of our clients. So if you are age 70 and a half or older, you have the capacity for qualified charitable distributions, particularly for those who are taking required minimum distributions. You can push some of that required minimum distribution to a qualified charitable distribution, and that amount is not included in your income. So we'll have a different video that really unpacks qualified charitable distributions in greater detail, but using a qualified charitable distribution is one of those strategies that we can use to lower the modified adjusted gross income that is used for those IRMAA calculations to begin with.
Great. So qualified charitable distributions, there's one thing. What are other ways that clients can handle this, especially as they entering retirement, as life is changing? What are some other things they can do?
Well, one of the things that we go back to oftentimes, if a client is retiring, and particularly age 64 or older, where the IRS is going to be, or Social Security Administration is going to be looking back 2 years on income, and that income is probably going to be higher because they're still in their working years, whereas in the future they're going to be retired. If there's a life change in there at age 64 or older, oftentimes what we'll look at is the potential for a client to file Social Security Form 44. And this basically just says, hey, my circumstances are changing. Please don't be punitive with me on Medicare surcharges, because I'm not making next year or even the remainder of this year what I have been making, because I have this life circumstance that is changing. Oftentimes it's employment, but it can be for other things as well. So that form can help to reduce the surcharges right off the bat if it gets filed correctly and the IRS receives it and approves it. So that is one of the key things that we can do right there immediately.
Well, as always, take what we've said with a grain of salt, use it as educational, and then go talk to your financial advisor, your financial professional, about the next steps that you can take for your particular situation. We look forward to seeing you all again soon. This content was provided by Retirement Planning Services. We're in Knoxville, Tennessee, and you can visit our website at www.seriousretirement.com. The information in this recording is intended for general educational and informational purposes only and should not be construed as investment advisory, financial planning, legal, tax, or other professional advice based on your specific situation. Please consult with your professional advisor before taking any action based on its contents.